there's this term in evolutionary biology called the adjacent possible. And what it says is evolution happens usually as a combination of the existing phenomena and in a relatively deterministic way. So like transformers being developed somewhere within Google, somebody taking that, building that up and creating OpenAI, then that actually becoming consumer subs application that charges $20 a month with ChatGPT. Those things all together create the breakthrough. If you ask somebody on the street, they're like, overnight, AI was created and it's living in this bot. Certainly this was not the case. There were very specific steps leading to this outcome that is now perceived as happening overnight. And this can be technically, like the example I just brought, but it could also be behaviorally or socially, like calm for meditation. Meditation was not as mainstream as it was when we invested, right? And so I try to identify these changes and then think about which companies could create a category around that.
Nico, I am so excited for this. It was 2015 when we last sat down together. I cannot believe it's been 8 years, but thank you so much for joining me today.
Thanks for having me again.
Now, this will be one of the best shows we've done because we're just going to shoot the shit. We're going to start as usual. I want to know, how did you get into venture first, and just set the stage there?
Yeah. So I started my journey in high school, not in investing, but in the first step towards investing, which was I imported iPhones from the UK, unlocked them, refurbished them, resold them, which then really opened my eyes to entrepreneurship, one. And two, some of the money I made, I invested in Apple stock in 2008-09, which I guess taught me two things. One, you can make money online. Two, if you believe in something and you put the money behind it, then that can work out for you. I didn't, it was very little money, and I actually took it out pretty soon after for vacation with a girlfriend at the time. But it was still, the learning was there. And so at the time that this was happening, was at 2008. And when I started studying, I read about a group in Berlin called Team Europe. They were a company builder, pretty similar to Rocket, smaller. They built Delivery Hero, a couple of other outcomes. And they had a small seed fund on the side with 6 million euros. And that was managed by Pavel, who was later one of the founders of Point9. And so I reached out to them, sent them a cold email, asked if I could do an internship. This is in 2010. And Pavel got back to me and came to visit a town close to where I was studying in Germany. And I had a conversation with him. He liked what I did with the iPhones. I actually just had invested in a company called Wir Kaufen's that was that model, but on a bigger scale, venture funded. I was just one person. And so I think we hit it off, and he offered me an internship. I worked with him for a couple of months, and then continued working for them part-time as I finished my studies in 2011, 2012. And then when I graduated university, they decided to spin out this fund of Team Europe. And Christoph, who was an LP in the fund, joined as a co-founder, and they started Point9. And I was just the young kid that was around and lucky enough to be the first person to work with them long term. And so they were still raising the first institutional fund, which was the one after the 6 million euro seed fund as part of Team Europe. And I was just thrown in, really trying to help them wherever I could, sourcing, evaluating, writing deal memos, not fundraising, but pretty much all other aspects of it. So that's how I got started with Point9. The next step, because this was when we actually talked last, sure. 2015. So this was the year that we invested. Probably I started leading my own deals that year. So it was like 3 years after I joined. And then in 2016, I was recruited by Insight and moved to New York, which was just after we had this conversation. And there I ended up being for, I guess, 2016 to 2019, investing a little later than Point9. Point9 was early stage seed. And Insight, is probably the biggest venture fund out there, one of them.
With 20 billion, I think.
20 billion, yeah, it's pretty wild. And so worked with Insight and was leading Series A's mostly for them, both in enterprise software and then some of the consumer subscription companies that we're going to talk about. And then in 2019, I decided to leave and start Adjacent, which is where I'm now at a firm that I founded, and which is an early stage fund that is investing across both Europe and the US.
So you've teed me up perfectly there with a couple of different kind of chapters. I want to start first on the institutions themselves. Point Nine and Insight, two of the most respected for different things. What's one takeaway from each that's impacted how you think and taken with you to Adjacent?
Yeah, so there's more than one. I'm gonna try to distill it. I think for Point Nine, really they opened my eyes to the world of venture, right? So it was really I had no idea that venture existed as such, and I think very few people did in 2010 in Germany, right, or in Europe in general. So it was really just understanding that there is an industry that invests in innovation and can make money and collaborate with the founders in a way that is venture capital was not clear to me. And it was really coincidental, as I said, how I actually learned about it. And so I think that whole, opening of the world, also giving me autonomy of, being involved full stack in all aspects of investing and then leading my own deals, and also beyond sharing credit for those deals and being LPs in my fund later on and being supportive. I think they opened my eyes to venture. Two, obviously I learned a lot from just being alongside them and seeing how they operated. But also I think as people, for me, they were, they put me in business, right? They taught me. And
I think also the discipline, when I compare you guys, you both have quite strict discipline. You know exactly what is your type of deal. And I think both of you know what is your type of deal.
Yeah, I think, and I will draw that parallel again when we talk about my current focus. But I think that what Point Nine was really good about was very early from Berlin, investing in European founders, agnostically to geography, pretty remote, even before this whole pandemic, and then also having a pretty specific focus on enterprise software, especially the SMB. So Algolia, Typeform, Christoph, Zendesk, and so a lot of those learnings I transferred. Switch over to Insight.
Yeah,
Insight is a very different firm. It's mature. It's as you said, a $20 billion fund now, but it was actually started as a $20 million fund in '96.
It was 20 million in '96.
Yes.
That was the year I was born.
There you go. Yeah, I was 7. So, but what ties both together, actually, to what you said, is that in '96, Jeff Horing saw the opportunity in enterprise software, and he was one of the first people, maybe the first person, to really bet on it. He was 26 years old at the time, right? So that shows you something. What is SaaS today? What's enterprise software today? Obviously, it's come a long way, but it was not very clear. It was not clear in '96 when he started Insight. It was not clear in 2010, 11 when Point Nine started, right? These things become obvious over time, and people start recognizing them as the playbooks are established and the benchmarks start to emerge.
Well, speaking of becoming obvious over time, you remember when I first did the shows, I just agreed with everyone and told everyone they were wonderful. And now I actually do have an opinion. And when we look at the consumer subscription market and we look at the winners, we see your Calms at 2 billion. We see your Duolingo's at, 4 to 5.
6.
6 now. Okay, it's been trading at 4 to 5. It's now at a high point of 6.
Yeah.
Okay. So it's moving around.
Yes.
But those are the winners of winners, and they've taken decades. And I actually love consumer subscription. So just let me roll with this one. And I want it to be a great market to invest in. But when I just look at the numbers, I just don't know if it is.
Yeah.
Can you help me understand?
Yeah.
Is it even a good space to be investing?
Yeah. So let me start by talking about the time of getting these companies to scale, right? So you're saying that there's very few data points for good companies, and the ones that we consider good are multi-billion-dollar companies, right? So how long do you think it takes for a company to get to maturity? Let's say from founding or seed.
How do we define maturity? Is that IPO or is that
let's say IPO level
I would
or
say
major acquisition?
12 years.
Yeah, something like that. So the App Store launched subscriptions in 2011. This is 12 years ago, right? So the first companies that were started around this model, like the Calm, which was 2012, which is 11 years ago, they just get to the level of maturity, right? So I think back to what I was saying about Point 9 and Insight, I realized that there's much less benchmarks and companies to point to, but I think they're emerging just now, right? So I think that the time to get to scale in this model has just been achieved. And if you look at USV, their first fund just wrapped after 18 years, right? So I think 12 years is, I think that's a good average, but it can be 10 to 18. I don't know, whatever we think. And so I think that we are seeing the emergence of these benchmarks. And when I started thinking about these companies, this was in 2015, I'll talk more about how I started thinking about it, because at that point there was no benchmarks, right? There was no public company. There was no company doing hundreds of millions. And that is changing now. And so I understand it from the outside looking in and being obsessed with SaaS and comparing it one-to-one and looking at the differences, which there are downsides of this model. I don't want to,
eulogize.
Yeah, I don't want to argue the opposite. There are downsides and there are benefits, and I'm happy to talk more about both. But I'm just saying this is a new model, right? Like our willingness to pay for software on a subscription basis was pioneered by the Netflixes, the Spotifys, and this is something that happened before some of the App Store dynamics on the App Store. But the first models that emerged later that have the software-like margin profiles of 70-80%. Those are 11, 12 years old, right? Maybe Duolingo, you can argue that they started a little differently and then they shifted it around, but even their acceleration, the revenue only started pumping in the last 5-6 years. And so my argument, we are just starting to see the fruits of this new thesis coming to be. And if in 5 years there's not more companies that we can point to that look the same or better, probably I was not as right as I think I am, right? So I'll admit that. We're early. So I consciously chose an area to focus on that I believed in strongly because of my background, having started to learn about the iPhones and the App Store and seeing the emergence of subscription models there from 2012. Then in 2015, really starting to focus on it and on the differences to SaaS and doing the first investments and then learning from that. So I think that, yes, today, I believe we're early. However, I have enough confidence based on what I've seen that we can get to multi-billion-dollar outcomes, right? I don't know about $10 billion outcomes, but I think 1, 2, 3, 4, $5 billion companies, we have them. Today we have them.
So I'm just going to pose my concerns. Yes. I just want you to, because as I said, I want to be a fan.
Yeah.
Like the revenue quality is always it's not enterprise revenue quality. The churn is super high. CACs are highly variable. All of these mechanics mean that actually we should apply a 2x revenue multiple to it.
Yeah.
How do you respond to that?
Yeah, I love to tell you my view on these things. I obviously hear these concerns a lot and think about it a lot. So where do I start? So first, I want to again just emphasize that I arrived at this model through SaaS, right? So we went from the first 4 or 5 years of my career. I learned early stage SaaS investing from Point 9, and then I learned later stage SaaS investing from Insight, which are probably two of the best firms in this area, right? And so what does make a SaaS model good? A SaaS model is great because it is high margin revenue, recurring from day one, and global in terms of their distribution. All these three things also apply to these mobile companies, right? Mm-hmm. The difference, as you point to, is that we have a higher churn. Yeah. True, is a problem. However, the insight that we've had with some of the first companies we invested in is that the churn is usually high in the first year. And then from the second year on, it looks very much like SMB SaaS churn. So once somebody is a habitual user of the product, typically they just don't decide to rip it out of their life, right? So if you look at year one, say you lose 50% of the customers, right? Then year two, from the remaining 50, the next year maybe it's 40%.
Can I interrupt? Is it though 50 or is it 80?
My companies, the companies that I work with, have at least 50.
So 50% churn.
And if not, then I made the wrong decision based on too early data points. But it's 50. And I have companies that have 80 or 90.
Wow.
Right? And there's usually some nuances to that. They're rare and they often come bundled with a hardware component or a specific type of service or product that is just not as volatile as maybe a health app could be. So yes, we have those companies. They're rare, but you have to find them, similar to how SaaS companies, great on paper, but there's a bunch of shit companies.
Sure.
Right? And so you got to find the good ones, sure. But the way that we steer them, and this now touches CAC, is usually we always, the companies I work with, this is the adjacent companies that I'm talking about, we steer acquisition so that we recover the CAC with the first year. Okay, so every time you get a yearly subscriber, that pays back your CAC. You don't overspend. Very rarely. Like on the you really have to have a good strategic reason to. But what that means is if you lose 50% of your subscribers, but they pay for themselves immediately, and then the other 50% actually look like SMB SaaS, if the market's big enough, that is actually a pretty solid model in my eyes, right? Mm-hmm. And so what I push back on is, one, yes, churn is bad, but it gets better over time. It's not 50%, and then you churn, but it's 50% and then actually flattens out. Yeah. So, and those stack over time. Even though there's a big churn in the beginning, they start stacking over time. So if the market's deep enough, you can stack them to a pretty high level. Second, CAC, actually, I think is one of the benefits of this model, that you don't have to hire a huge-ass sales force to sell your product into the market that burns a lot of money, but you actually have flexible spend, usually also a lot of organic, where people just, you have
What is a good level of organic? I never know.
I mean, yeah, that is a good question. So the guideline I give is 50%, and this is mostly for not forgetting about it, right? So that does it mean that there's companies that sometimes have 60, 70, 80? Yes, and sometimes you also want to do that for a period of time if the unit economics are very good, right? Like if you can make very good returns on the acquisition spend, why do you not take advantage of it, right? Like if you have like a 4 or 5x, you can do it, then you just scale it up. But you want to see some component of the product, whether it's an actual feature within the product, whether it's just, I call it the power experience, where it's something that you show people, right? Like your Oura sleep story or whatever. Like there's something built into the product that accelerates paid. And I think it's really working when you see that the organic scales in lockstep with the paid. So even though you increase paid, right, your percentage of organic stays the same, 50-50, because there's some kind of reinforcing factor.
Totally.
So that's what I hope for. But it doesn't always happen. Like and obviously there's phases of companies, and there's also no silver bullet. Acquisition will change over the journey of the company. But I think that's like the point I wanted to make about CAC is, one, it pays back within a few days, right? So it's
a few days.
Because the annual sub is paid up front. So usually it's like at day of download, or like with a delay of like 7-8 days.
Do you only do annual paid up front?
This is the majority of the...
Really?
It's like 70-80% of the conversions that we work with. Yeah. And when I say we, the best practices of the founders that I work with, right? Yeah. And this is how we operate. Because
do you not find... So I find that really interesting because, like, I'm a customer of some of your companies and love their products. But without being a dick, I'm less price sensitive than some other people. It's fine to spend $100 up front for me.
Yes.
But actually, it's a lot of money for people to spend with little buying time. I'm surprised that actually the annual upfront is as prominent as you say.
Yeah. So there's some tools that you use, right? There's I have a couple of things to say about this. But the first is you give a discount on the annual, right? And so the monthly and sometimes the weekly, actually, I'm seeing some really interesting data now about weekly as well, which we can talk about later. But the annual discounted for somebody that gets enough value from the product in the Western world, also depends on geo, right? One of the advantages is you're in 200 countries once you go into the App Store. But in the Western world, most people today, and this, I think this is like a big part of the thesis that I think is underestimated, is our willingness to pay for a product that drives value, right? So like, yes, for some people it will be, expensive, but the price increases that we have seen since let's say Calm launch to what it charges yearly today and what it will charge in 5 to 10 years, I think it has a similar trajectory to what we've seen with SaaS companies and their ability to extract value as people are realizing what type of value they're deriving from the product. Does that make sense? So I think, one, we are surprised by how little sensitivity we see for really good products, because the willingness to pay for those products is increasing quicker than our ability to understand that.
I don't know how you feel about this one, but and kind of fuck schedules.
Yeah.
But like, I love PhotoRoom. I love Captions AI. I think you're in Captions AI. Yeah. I've spoken to both founders, Mathieu and Gaurav, and I've said, you make very hard product decisions very early. It's like, hey, pay up front now. And I'm like, I haven't even tried a lot of the product. Right. And how do you feel about that decision? And they push back and say, we've got the data.
So I think there's that is a philosophical question. Like I can tell you the data as a company. So I invest in the best in class subscription companies, but I also invest in the infrastructure for them, right? So RevenueCat, Superwall, UXCam, Runway. So there's companies I work with there that are powering these companies. So it's in a way it's a proxy bet for me on the thesis, but there's also a lot of synergies, right? And so what Superwall is doing is optimizing paywalls. And so one of the learnings that we have from that is that the number one indicator for driving conversion is how often do you see the paywall, right? And so that is like, it's very common sense, and you can err on the side of being annoying, which you want to avoid. Depends on what your strategy is, but usually you probably avoid that. But showing the paywall does not necessarily mean you have to convert. And so most of these are structured in a way where you have a free trial, you are being shown the paywall often, but there is a certain amount of free usage that you have. But the more often you show it, the higher the conversion will be. And then paradoxically also, the paid conversion oftentimes activates the user, right? So it's like, there is some it's like maybe the gym membership effect, I'm not sure, but it really often drives higher engagement.
Final one, and then do you want to move to adjacent? But when we look at kind of the channels at our disposal to acquire customers, the thing that also worries me is they're so volatile in terms of our control of them. When you look at a lot of the changes that Facebook have made, suddenly companies have not been wiped out, but had huge changes to their customer acquisition channels overnight. Does that not make you shit the bed?
No, that is... I think that is one of the major risks to manage, because you cannot be dependent on only one channel, right? And so,
but it's so hard because when something's working, just go for it. Don't get cute.
And I think we like that is like you should do that, right? Like you take advantage of a channel when it opens up, but then you try early enough to invest in diversification of that. And it is possible. Like it is not the case that there is only one channel, right? There is a few channels, and it's hard to crack the next one, but I've seen companies do it, right? And so you can do it. It's hard. You have to have discipline so that you don't do it when it's too late, but it is possible. And I think, another aspect of this is interesting also, I think you touched up on PhotoRoom is, and this is, I think, sometimes also how I'm misunderstood, is that people reduce my thesis to an app with a subscription, right? And I talked a lot about this because it is a big core of it. I think it's just the easiest way to get started. You write an app, you put it on the App Store, it's in 200 countries, you charge annual upfront. Often with a seed round, you get to tens of millions in revenue. That's crazy. Right? Like, what other companies do you have where a seed round gets you to tens of millions in revenue? I don't know. There's other challenges to the business model, but this is not one of them, right? It's like, it's a very cash efficient way to get started. It means it's also not as dilutive if you are in the seed, and then it steps up to, where some of the follow-on rounds for those companies were. And so I think the seed is a great spot to invest in these companies. And I think that the cash efficiency is a good starting point, but then it usually is only the first surface area of your product, right? Take PhotoRoom. It's a prosumer product. We started on mobile. It's successful not just in the US, but also in emerging countries. And now we're bringing the same product to web, to Teams, and we have an API that people are paying 600 digits for a year. So we start with a mobile subscription, but it evolves into much more than that, right? Because the underlying technology is what's interesting, and mobile is just the first step to get started. It can become much broader over time.
You kind of dangled something in front of me there. You said, that's why I think seed's a great place to be. And we're jumping around, but
good.
We said before that actually A kind of sucks as a place to be. Now I have my thoughts around why, but as I don't want to lead the guest. How do you feel about the right insertion point and where kind of price to value is best?
So it's hard for me to really make a qualified statement across all verticals because I can't. It really depends, right? There's grade A's for sure, I think there's also grade A's in my category. I think that the best, for me, that's why I chose seed, is that I believe that seed is the best in terms of upside potential, downside risk, and expected future dilution, especially given that I operate under the assumption that I have multi-billion-dollar exits, not $10 billion exit, right? That is reflected in both when I come in and then how big my fund is, which is reasonably small, and consciously so, because I want the strategy to work. Even if it's a $2 billion exit, it should return the fund once, twice, maybe 3 times, depends on how early I got in. And so I think seed, that's why I choose seed, right? And I think the reason to expand more strongly to A would be that we have more confidence that the outcomes get bigger, and we have some, I guess, portfolio that warrants diversification across a number of investments. And so I think that there's a limit to how late you want to raise capital with these companies, right? And so that's also a mismatch that I have with some of the multi-stage funds, right? Because for me, if I invest at seed or A, I do seed and A, right? It's like, I would say 70-75% seed, and then the rest is A. So I do it. I also do it if it makes sense and if it's not a crazy price, right? But oftentimes I think, okay, we invest, we build the company, we get to the significant level. We only raise follow-on funding if we really see those next chapters and those next levels of acceleration. Otherwise, let's not raise too much too early, right? Like, I'm not the one that chases high valuations. I'm actually the one that says, let's keep the options open, right?
You're also not the one deciding. The founders listen to you.
Yeah, no, that's not always, no. Which is the founders that I like the most, probably.
Well, but this is what's hard. Like you said about the capital efficiency of this business model, and I totally agree with you. The hard thing is that actually founders see alternative funding rounds for alternative scaling companies, enterprise SaaS, and they go, we want that.
Yeah. No, it's I think, so I caution not to raise on too high valuations too soon, always, because I want everybody to win.
Have you been hit by the 5 on 25, the multi-stage product of 5 million on a 25 million post? Andreessen Pioneer, dear friends and Andreessen, thank you for that. It's a challenge.
Yeah, so I don't see them that much. And I think the reason for that is that I'm active in an area that is not that hot, right? I like it. You may like some of it, but
yeah, I do.
I don't really think that these firms think of these companies as moving the needle for their billion-dollar funds. And I think that this is one of my opportunities. You see, I think operating under the assumption that you need $10 billion outcomes to move your fund is a very hard one, especially in this macro, but generally. And this has different reasons. One, $10 billion outcomes are very rare.
Yeah.
They have been more frequent in the last 3 years. But a lot of that is not true anymore, right?
And a lot of them are not $10 billion anymore.
Exactly. And so putting yourself in a position where you need that to deliver real returns for your fund is, one, very difficult to get high multiples on the LP dollars. Two, from where I sit in the early stage, it has always been true that you were surprised by the upside and you choose to invest in something that has a reasonable chance at becoming big enough to make sense. But then in the outsized scenario that it becomes very big, this is the optionality asymmetry we shoot for. So I think there's more surprising positives in aiming lower and being surprised than in wrong data points or wrong decisions by saying it cannot get this big. And then not investing. You see where I'm coming from?
Yeah, I totally do. You're just such a European. I have Americans on the show and they're like, it's going to be $100 billion company. And, I had someone on the show the other day and they said, but if it's $1 trillion company, we'll all make money. And I was like, well, yeah, I agree with that. Yeah. Okay, so if we take that and we take this assumption that actually there will be billion-dollar companies, maybe 3, 4, 5, but the 10 is harder. Take that back to the fund model. How big is the fund? How many lines, number of companies in the fund? Just walk me through that portfolio construction.
So the fund is, I never announced the funds, and I'm inclined not to do so, but I'll give you all the other things of the model, and you can work back from that. So the model is that I have somewhere between 20 and 25 companies in a fund. The majority of that is seed. Seed for me is a little more flexible than how other people think about it. So I've done very early seed from Opal, right? We've done that together. Kenneth and a prototype. And then I've done late seed, which is company has raised the seed, but I really want to invest and I find a way to get them to agree. And that means it's a bit of a later seed in terms of the pricing, but it's not quite yet an A. And so that's where I move. It's like there's some flexibility in that. I also don't care about the labels so much. Like some of the seeds I've done and some of the A's that I've done were at the same valuation, like, so it's just like, those labels are arbitrary to me. And so I just try to get my ownership on those 20 to 25 companies, which is, with the current fund I'm investing in, it's 10%. For the last 6 months, it's actually been 11% because the macro is starting to come down. Maybe also I'm becoming more bold. I don't know. But it's 10% for the average of this fund. The first fund was a little different because I erred on the side of proving that I can be in good companies. So there were some companies where I have less desirable ownership. They're great companies. The hit rate, I think, is quite high in the first fund. But with Fund 2, I wanted to prove I can get the double-digit ownership, and I am getting it. On the same side, it is probably still a bit too early to say that the hit rate is the same. Because it's just a bit smaller fund. So it's 20, 25 companies. The check size goes between 1 and 7. The average,
1 and 7?
Yeah.
That's a big range.
Yes, but it's, I think...
Is that 7 across rounds, or is that in one hit?
I have done, the biggest check I've written is 7 in 1.
Whew. Fuck.
Yeah. And that's what I would consider.
Did your decision making change for that 7 versus the 1.5s?
Yeah. So so my position currently is I made this graph, which is probably the simplest positioning graph. That if you had a whiteboard here, I would just put it on the wall now. But it's I try to lead at seed and I try to co-lead at A. And so what that means is that, again, 3/4 of the fund are seed within early and late seed. And then the A's that I'm doing, I usually collaborate with other funds on them. And so, especially in this macro, I started doing this a year ago, but I think I like that part of the strategy because my fund is small enough so that I can do it, so that I can get on my ownership target and another fund can get on their ownership target. At the same time, it enables the founder to have more money so that they have longer runway, which typically now I plan for 3 years.
Yeah.
And it also means that there should be a pretty significant step up in valuation. We talked about this, right? I think seed and A are very good spots for this model. Yeah. From B, depends, right?
Is that where you see the biggest jump in valuation from A to B?
Yeah.
Yeah. Why do you think that is?
Because people don't like consumer subscription until it does tens of millions in revenue.
And then everyone fucking loves it.
Yes.
Yeah.
Because you don't like it when you don't understand the dynamics and you don't see this exponential growth. Once it goes from a few million to tens of millions within a pretty short period of time.
Yeah. And you have much more reliable data on cohorts, I guess, by that point, and you actually have a lot more to go on.
Yeah, but I still am somewhat disappointed. I mean, I like when people invest in my companies, right? I don't want to discourage people from it. I don't depend on it because usually I structure the rounds in such a way that we can get to cash flow positive with a lot of those companies, or with the partner fund that they have such long runway that is an option, or there's a lot of time to prove the next round. But I think that it's a bit of a, I guess a critique that I would have about VCs is that they criticize the model until it breaks out and then they fight for it, right? And that's, for me, venture, there's different parts of venture.
You can say what you want. It's just me and you.
Okay, it's true. Nobody's listening. So for me, true venture is venture that is thesis-driven and early stage. And I know there's different ways of playing it. I know that there's different stages and different skills required. I am the first one to say I shouldn't be on a public company board. So I actually structured. We can talk about this as well. But I structure my work with the companies such that I am very involved, or more involved, very involved, probably subjective, but I'm involved early on, and I'm happy to step out once there's a scale that I'm not that suited for anymore. So I don't have any ego about being on the board. I actually deflect boards. I take 2 board seats per fund.
How do you decide which board seats to take?
It's so the I'm still also learning about this. Okay, I'm also, I guess this is now coming up on 4 years as my own fund manager. So there's areas that I'm also still learning. The way that I've approached it so far is that at seed you don't need a board, I think, because you're chasing product market fit. And so most of the time I'm in your way. The best thing I can do is share learnings from the other companies, be a strategic thought partner, and then make introductions to other founders that have faced similar issues or solved things that you're facing right now. And so that's my role. And then, there's some like financing related things and stuff like that. But that's really how I see my role. And so then from A, I think it makes sense to have a board. Yeah. Since I'm usually not the one that leads the A, I give myself an option to be an observer on the board, which will be exercised if it makes sense. But I'm also very happy to let people decide how they want to structure the board. I think there's people that invest at A that are very good. For example, I love USV. I collaborate with them. One of the Series A's that I co-led recently was with USV, and I was very happy to have them take the board seat because yes, I want to learn, and I have an observer, so I can dial in if I want. I do that usually because I also learn from it, and I want the information. I have the relationship with the founder, but also it's a company that will benefit from the attention of a USV partner. Sure. And I can't give the same, right? And so I just try to be very mindful of.
Do you find it's possible to co-lead the Series A's? Because that's bluntly, I think we're going to move back to an era where venture investors go, shit, the outcomes are lower, and so our ownerships need to be higher. And when we did take 10% in bubble times, we now need 15, 20 again.
Yeah.
Ophelia, who I had on the show recently, won't go less than 20.
Yeah. Yeah, I think there's some firms that don't want to collaborate. Yeah. And if you say that, you don't want to collaborate, that is fine. I've consciously decided to keep my fund at a size where I can do that. And I think there's other funds out there that believe in small funds and that are willing to do that. Can it change with the macro? Yes. And is it possible that somebody will start to ask for more? Yes. But then that usually, I think, also would go hand in hand with valuation expectations going down, dilution expectations going up. So maybe it fits the formula again. Yeah. I don't know, but I can only talk about how things are today. And from where I see them, it is possible, actually desirable by a lot of founders, by me. And I just have to be early to those companies so that I can play a part in forming how the round comes together.
Nico, how price sensitive are you?
So I would say, so I give you one piece of advice that Jeff Horing, the founder of Insight, gave me after working with me at Insight for a while, was that he basically, his only comment was, don't be so cheap. And you can take that to the extreme and become too generous. At the same time, I believe in being fair without being cheap or generous, right? And so the way I approach it usually is that I have a conversation with the founders about what is reasonable from both ends and then try to find a solution. And it hasn't happened yet that didn't work. And so what does it mean? Does it mean sometimes I'm too generous? Maybe.
Do you ever worry that you structure rounds to fit your fund strategy and not what's optimal for the company? What I mean by that is I'm looking at co-leading an A now, and the company want 15 on 80 post. And actually, for me as a fund, that's kind of uncomfortable. I'd be writing a 7.5 check alongside another co-lead versus what would be much better for me, which is an 8 on 45, 50 post. Okay, where I'd be writing 4 versus 7.5, big difference in check. Now, it's not actually best for the company that they raise that smaller amount. It's better that they raise the bigger amount.
Is it?
But you could argue both ways, but they very much argue the bigger.
They have a preference.
They have a preference for sure. But my point being, because of our cap fund sizes, and we're both in the same ballpark of fund sizes, it's better for me that. Do you see what I mean? Do you ever worry about that? And how would you advise me there? Actually, really interesting.
I think we're serving founders, and I think that long term we will only be successful if the founders that we work with are happy with how we're collaborating with them. Does it mean that there's some tension sometimes between what you require in your fund model and what the founders require or want, yes. But I think that the start of a partnership ideally is being open about your limitations or the things that you need to be feeling good about this, and then finding the common denominator, right? So I cannot say in this scenario specifically, because I probably lack some context, but the way I would approach it is think about what I would like, then really understanding where they're coming from and what they're optimizing for, and then trying to fit that together as good as possible.
Yeah.
And that might not always be possible, in which case you're going to have to make a decision if you go with what you perceive to be better for the company or for you. But I would say long term, I would decide to choose for the benefit of the company.
Nico, don't be so cheap. What's the time when you've turned down a deal because it was too high and you've lived to regret it? It's a compliment to the company, so you can say it.
Yeah, let me think. If there is one.
I've had many, my word.
That you passed on because of price and you ended up regretting it?
Well, I mean, I did, and then, the current situation happened. And now the company's turned out to be, not such good companies.
Okay. Yeah, so I think there's just...
I really regret Riverside. Oh,
not
fuck
doing
me.
it.
Oh,
was it a valuation?
Fucking Oura Zeev, who I love,
Yeah, he's great.
amazing dude,
Yeah.
brought it to me, and I said, no one will do this. You know why? Because 90% of podcasters don't earn more than $100 a month. It's $50 a month.
Yeah.
No way. We use it for every virtual.
And where were you wrong there?
Where was I wrong? I was too cheap.
Okay.
Well, no, I was too cheap, and I didn't think the market size was what it was. I didn't see the evolution of the market. I just saw podcasts as a static market.
Yeah.
Everyone in...
And this is, I think, core of what I think we should be betting on as early stage investors, which is the relative development of these markets, right? It can never be the static. The way that a growth investor looks at it is at the static, right? They need to understand the size and the benchmarks and make it fit their formulas, and then it has to add up and make sense. Thesis-driven investors, I think, need to understand the magnitude of change in a specific, segment or demographic or behavior, and then bet on that.
I totally get you. I did not anticipate that marketers and sales leaders would also be content creators within companies.
Right. Yeah. And I'm not saying I would have at all. I'm just saying I think this is where insight and alpha and so on so much comes from. Understanding not what it looks like today, but what it could look like in 10 years, right?
Totally.
Yeah.
So that was mine where I'm like, oh, and it's also the most horrible reminder because I use it every day. and to script. I turned down to script, and I turned them also down every round. It wasn't, fuck.
Hey man, it happens. I mean, this is actually a good, I think most regrets that we have as investors are the companies we didn't invest in.
Sure.
Right? Sure. And so what does it mean? Does it mean that we have to see more companies? It usually means we have to be better at making decisions on the companies that we see.
Yeah.
You know what I mean?
I do.
So I think one of the differences, obviously, of our approaches is you have this and a platform and huge network, and you have a lot of volume.
Yeah.
I try to stay away from volume consciously. Right? This is the first time I talk about adjacent publicly for you.
Very kind.
And I guess for adjacent, but still, it's the first time. And the reason for that is that I actually am very, very mindful of my capacity, and this is both time, but specifically mind space for making these decisions. Because I think that every investor has a bigger regret portfolio of anti. And so it's not about seeing everything, seeing more, it's actually about seeing better in the small n, I think, in my strategy. And so to your question, this was a bit of a diversion, but did I not pay up and regret it? I honestly, nothing comes to mind. So I'm not sure if that means it didn't happen or just that I didn't obsess about it enough afterwards. I think I'm willing to break my own limitations if I really believe.
Can you tell me when you've broken your own limitations?
this I don't want to take the full credit for it, but this is one of the reasons why this is the case. When I was with Point9 and reinvested in Revolut, it was both outside of the focus, right? It's a mobile consumer app. It was actually had just closed the seed round with Balderton. So there was no actionable opportunity, and the only way to get in was actually forcing them to take more money at a step up in valuation, which was, I think, at the time the highest valuation we had accepted at Point9, and also led to the lowest ownership that we had, at least for seed. And it was a great decision, right? So what does it tell you? I think that part of the frameworks that we set for ourselves are a litmus test for the conviction to break them, And this is a very,
It's a very hard one because you want to have the elasticity to break them without it becoming the norm.
Yes. And so you need this, and I'm not saying like I've mastered this at all, right? I recognize it, but I'm still trying to get better at it. But I think it's the rigidity of the model needs to be there so that breaking it is actually meaningful. You see?
I totally see. But I think another thing that's actually part of that is a partnership. A partnership reminds you that you broke the model, Nico, and fine, but that is the exception. It's very easy for us as solo GPs to lull ourselves into, well, I mean, it's an exceptional entrepreneur, it's an exceptional opportunity. So I do want to ask you mentioned that kind of constraining your own kind of time and view of the world. Like, how do you assess the rise of solo GPs?
So, the term solo GP, I think also when you started was not yet a thing.
Yeah.
Right? So it's not like we came out and said we want to be solo GPs. At least for me, I don't know. It didn't happen that way, right? And obviously we were not the first. I also don't want to claim that. You mentioned RNZ. I have huge respect for him.
Yeah,
I saw him
amazing.
in Palo Alto 3 weeks ago, and I learned a lot from him as well, just talking. And he's also scaled our model to some extent, which is we can talk about after. But the way that it happened for me was really that I became confident in what I wanted to do, which was early stage, Europe, US, consumer heavy, software heavy, some SaaS and some other, but that was what I wanted to do. And I wanted to do it in the way that we've discussed here today. And it was not clear to me where I could do that. And I didn't want to do it somewhere where I felt like it didn't fit the positioning of the institution. And I also didn't feel like earning my place in another institution again, because you've been at firms and it takes a while, right? You need to, there's hierarchy, there's politics.
I think I'm unemployable, to be honest.
Yes, and so I think the same for me. I've been employed, and I'm grateful for the time and the learnings, but I also always operated in a very autonomous way, and I think I'm getting better with the ability to fully find my own style, and I need that space.
I totally agree. I mean, it brings so many ways I could take that. But I think the concern that I have on the solo GP model, one thing that pisses me off there is when, LPs say, well, you get hit by a bus and you're fucked. And I'm like, well, yes, and I'm not going to worry about it then. So don't worry. But it's like, number one killer of partnerships is actually partnership breakups. Yes. And you're like, well, it's quite hard for me to argue with myself that much.
Yes.
So I think people forget about that. My question to you is, does it scale?
Yes.
3 funds down, 20 to 25 companies, faster deployment cycles. You're at 60 to 70 companies in 5 years.
Right. Yeah. So before I want to answer this question, just before, I think you touched also on something here with being solo and the risks of it, but then also the benefits of it, right? Because I think you're absolutely right that partnerships can be one of the biggest reasons for it not working out.
Sure.
Especially if it's a forced partnership, right? And so when I decided to start a firm, it was not, I will do it by myself. It was just, okay, I want to start a firm. Who do I do it with? There's a small list of people I would like to work with, but 1, they're all at great firms. 2, we never really worked that closely together. Maybe it's better to co-invest for a while. So it was like, it was not I want to be by myself, I'm going to go do it. It was, I want to do this and I don't want to rush into anything. So let's start this way and then see what happens. And so it was a very organic way of getting there. Now I'm quite comfortable with it. I don't even know if it will stay like this forever, to be honest, right? Like I'm young, I'm, 4 years in, like maybe in 15 years, the world looks differently, right? Maybe in 5, maybe in 10, I don't know. It's just, I understand things change, and maybe this is one of the aspects that change, perhaps. But I think that what it just shows is that there is people, I think, that benefit from being able to fully follow their own thesis. And I will also say that as a person, I've suffered in the past from very negative feedback on my deals. So I'm sensitive as a person, I guess. And so if I have a strong opinion on something and that gets mistreated in some way, whether it's aggressive or just passively, I think that will change my opinion, or at least give me a lot of frustrations in some sense. And so I think that in the early stage, where it's a lot about having a pretty unique perspective on something that is not a consensus-driven thing, but is really aligned with you believe it and nobody else. I mean, sometimes some other people, but fewer than actually do believe. I think solo GP is, for the right person, a very good fit for the early stage. And I think most consensus-driven models at the early stage, unless it's a very aware and mindful partnership that really supports each other and can all see the complexities of human interaction, I think it's maybe beneficial to just have one opinion, as long as you're right more than you're wrong.
How do you deal with deal decision making? It's tough on your own.
Yeah, I guess you have to find your own process. And I think that there's just different types of people. I think there's some that really need to test their conviction with other people. Yeah. And then there's others, and I think I'm included in that set, that really challenge themselves all the time, but also with their opinion on a deal.
How do you challenge yourself with your opinion on a deal?
I try to just, first I have, first I have to actually have a hypothesis and have one opinion, right? So this is before I even challenge myself. I think the core of how I operate is that I have a bunch of frameworks and ways of looking at the world and technology that I've taken from the 12 years that I've been in investing and refined to make it fit my style. And I apply them every single time. Some of that is very consciously, and some of that is probably a little subtle and just instinctively at this point, right? For example, founders is actually interesting. It's I don't think I have a great framework for evaluating founders. Huh. At the same time, I think I've worked with amazing founders, right? And so I think it's just that is, I think, a more instinctual thing where I just I'm attracted by a certain type of founder, and they are attracted by me.
Who's the best founder that you've worked with?
The best founder.
I can say mine easy. It's Lior and Akin at Triple Dot Games in London, or Triple Dot Studios. I've never seen execution machines like it. Speed of execution, never miss their fucking numbers. They are just execution oriented like no one else.
Yeah. Yeah, it's, it's not, I am happy to mention some names. I think there's so many, maybe this is part of why I don't have a framework, is that I think that there's so many different ways of being a good entrepreneur, right? So I think that there is a fit of an entrepreneur with a specific topic or with a specific company, and then the ability to, just push that to the limit. So I guess ambition is one of the, right, factors, right? It's how driven are you? What's driving you? How ambitious can you be? And
do you ever worry with ambition that it can come over time? And when I just say that, when I started this show, I told myself, when I get a job as an associate at Balderton, I have made it. Life is done.
Right.
And now I want to change the whole way that Vanish is structured.
Yeah.
And we talked about it earlier, about some of the things we're doing. Ambition came over time through turning over the next card.
Yeah. I think that I don't. As opposed to other people, I don't think that everything is set from the beginning.
Yeah.
Right. Like so, I do. Like I've invested in founders that told me, we want to scale to 10 million and then we'll see. Right. Like which nobody else would do that, because it's not. But because I believe that if I'm right about what I call the adjacent possible, which is for me this overarching macro driver for a company that is happening independently of the company and pushing them forward significantly. I think if you're in that rush, you reconsider if you sell at 10 million or if you keep going because,
So this adjacent possible is like a macro tide which carries companies' momentum beyond.
Yeah.
What is that? Help me understand that.
Yeah, so this is, it's one of the reasons the firm is called, and we're 3 questions deep here, so we might have to go back into the former questions after, but the adjacent, I call the firm adjacent because there's this term in evolutionary biology called the adjacent possible. And what it says is that evolution happens usually as a combination of the existing phenomena and in a relatively deterministic way. So we're somewhere, right? And based on what is available at this point, the combination of the things usually lead to the next step, right? So like transformers being developed somewhere within Google, somebody taking that, building that up and creating OpenAI, then that actually becoming consumer subs application that charges $20 a month with ChatGPT. Those things all together create the breakthrough, which if you ask somebody on the street, they're like, overnight AI was created and it's living in this bot. Certainly this was not the case. There were very specific steps that were leading to this outcome that is now perceived as happening overnight. And so my belief is that understanding some of those components and where they could lead to actually can give us some understanding of the companies that can be built in the next 10 years or that really benefit from a trend. And this can be technically, like the example I just brought, but it could also be behaviorally or socially, like Calm for meditation. Meditation was not as mainstream as it was when we invested, right? Opal, that's why my thesis with Opal was that screen time management will become, we're just learning how to deal with these phones, right? They're always in our hands. We're talking to each other and we're looking at our phones. It's not a healthy behavior, right? And depression's on the rise in the West. I'm not saying this is only because of this, but I think technology and the way we're using it and the way it's disconnecting us from each other has a role to play in that. And so I try to identify these changes and, current macro changes, and then think about which companies could create a category around that. And so I believe that those companies benefit from growth drivers that are much more meaningful than any execution.
I totally get you and agree with you. I want to ask on the consumer subs element there, just getting back to it, but I've seen so many consumer subs that are leveraging OpenAI models in particular.
Right.
And it's what all investors say is, listen, there's no proprietary data models here. You're a thin layer on top of someone else's model. Yeah. Not interesting. Yeah. Done.
Yeah.
Is that fair? I don't know.
I'm not sure. Like this is also something I learned from Jeff Horing. He talks about software in a way that is coded experience, right? So like most software being workflow solutions are actually an understanding of how you can make processes better in a specific industry or in a specific workflow, and then encoding that in something that automates a lot of that. And now the automation of this is coming to the next level, right? With AI. Yeah. And this will happen both in enterprise application, but also in consumer applications. And so I think that a lot of the value that has been built in software over the last 20 years has actually been in the application layer that takes these breakthroughs and just verticalizes them for a specific use case or a specific customer demographic and monetizes them. So the way I look at AI, and I actually have a lot of I think it's super interesting what it means for consciousness, and because we know nothing about what consciousness actually is, right? And so there's no telling what could lead to a consciousness emerging because we don't understand what it causes in a human, right? So there's a lot of very philosophically very interesting, I think, things happening there beyond the wow of what the technology enables today. But the way I think about it from an adjacent perspective is we're going to have companies that are already consumer subscription companies that are implementing this to make their products even more sticky, more functional, and give features that were not possible before.
I totally get you. So it's existing players who already have existing data models and proprietary data sets that can then leverage them. Yeah.
That's how I look at it. But it's certainly, I'm also just trying to find the angle that kind of fits my thesis, right? So that's how I have to operate.
Of course. Can I ask, when we project out to the next 10 years of venture, what do you think the market looks like there? Like, it's changed so. I think this has been the most defining 5 years of venture of the last 50 years of venture, actually, when you look at the different models and innovations that have arisen. When you think about the next 10 years of venture, what do you think the venture model and world looks like?
So I on a high level, I don't have any doubt that there will be innovation. If anything, it will probably keep on accelerating because of more adjacent possibilities. So I think that there will be venture, I think there will be innovation, and I think the model will persist. As how the industry is structured, I don't have a crystal ball. From what I'm seeing today, I think the next few years will be pretty difficult for most firms. I think the big ones have become too big, and I think a lot of...
What happens to them?
It depends on the firm. It's certainly hard to make a blanket statement, but I think that fund sizes will go down. Right. I think people will leave because if you have carry in a $3 billion venture fund, is that worth a lot today?
I don't think that realization's hit, by the way. Listen, I'm super candid. It's one of the reasons the show's been successful is I kind of forget that cameras are turned on, and so I just speak freely. But I'm actively trying to hire partners, investors, anyone talented who can invest. Yeah. They still buy that their carry at the $2 billion fund is worth $30 million on a 3x fund. I'm like, trust me, you ain't shooting 3x on that $2 billion fund.
Yeah, I agree with you. And I think LPs agree with us. At least, I mean,
LPs for sure agree with us.
Yeah, and so, but that means, right? Like it's a question of time, when from a LP perspective, to put pressure on these funds that they need to see data that those type of vehicles can create the same type of outcomes, and maybe they could in the last 12 years that we were in venture, right? Or I was, and I admittedly also like it was a whole bull market run, right? So I see that, and I'm actually cautiously excited about this period, which is maybe a weird thing to say, but I think this is like earning your stripes also, right? It's like, how do you actually navigate this scenario? And I think as small funds investing early, we have a benefit there because I do believe that it's still the best place to be. The risk is the highest, but the opportunity on the upside as well.
I don't think seed is a great place to be right now, man. And I am a seed investor with you. But I'm saying this because, bluntly, I think A, B, and C, no one wants to deploy big dollars. All the multi-stage funds just don't want to put cash out the door, but they all want to be in market. So they're all moving earlier and earlier to seed. They're telling their principals and associates, hey, go write some seed checks while we deal with this morass of shit on the board of all these companies. Right. Bugger. Yeah, and that leads to this massive inflow of capital that's less price sensitive to seed, and it makes our jobs harder.
Yeah, I mean, I guess you have a point that this is happening. At the same time, it's a temporary issue, right? Where these funds are not. They have to also work on their growth funds that are sitting untouched, right? Otherwise, they're not raising it. I guess they have some flexibility, but at the end of the day,
they're touching it for a while. Remember, a lot of them had to increase their GP commits to get the new fund sizes. So every time they do a cap call, they have to actually shift 5-10 million themselves.
Yeah, that's a good point.
On top of that, they committed to your fund, to my fund, to 10 other friends' funds, and then they borrowed against the carry watermarks at the super high prices from SVB and FRB.
Okay, so this is why I'm not so worried about them being really difficult for us in the seed. They're worried about other things right now.
For sure.
Right? Like their core existence is in peril, if you describe it like this, right? And so will they come down and just fully focus all of their energy in competing for seed? Is that really what will save them?
No, but they deploy their team to. They deploy their 28-year-olds from HBS.
Okay, but did they start those funds?
No, but they come with a big name brand, and they put 5 on 25 down.
Okay, this is also, I guess, true. And I think where I'm consciously trying actually not to be is I'm not a big brand fund, and I'm not trying to be. I, in fact, think that I'm working with the person that actually thinks those firms are the establishment. Does that make sense? So I actually don't think I should be competing for a seed round where the founder is trying to get a big brand name on board in the seed, which I think has, I mean, there can be a good fit, I guess, in some rounds and for some topics, but it's not their core business, right? It's a defensive strategy to keep ownership in the companies that will be big outliers, right? So it's a strategic part of their game that leads to, hopefully the core being more successful. And so this is all I do, and I'm fully focused on it. I'm the founder of the firm. You only get me, and I move faster. That is appealing to a certain type of founder. It's not appealing to all founders, right? And I accept that. And I don't try to be in all those processes. So it's very rare that I actually come up against one of these firms because I don't think we're shooting for the same type of founder.
Who cares more about the brand name firms, American or European founders?
So one thing I've actually noticed is that the European founders care about having a US investor.
They really do.
Yeah. But this is also something that...
Even the shit ones. They're like, oh, wow, tier 3, that they came from the Valley.
Right. Yeah. I think this is... I mean, it's a little bit... I guess I'm European, right? I grew up in Germany, and I also... I mean, I don't know. I feel myself... I'm a little bit between the worlds. I spent a year of high school in the US and lived there for the past 6 years or so. So I do feel both. I think it's a little sad that we have this, as Europeans, this bias towards the US investors are clearly better.
Yeah, idealization, I would say. Actually.
The idealization. Yeah. That being said, I've met many more investors that I'm impressed with in the US than in Europe. Right?
100%. Have you seen how few investors I have on from Europe?
Yeah, that's true.
You very kindly said that you were speaking here for the first time. You're like one of 3 in 3,000.
That's crazy.
Which says something.
Yeah.
I get that. What's the hardest thing with adjacent for you today, Nico?
The thing what we discussed is a lot of what I'm thinking about, right? It's how do we make sure these companies can realize their full potential, right? I'm pretty...
Do you think the majority of your exits will come from PE roll-ups? I'm just looking at all these companies. What do we do with this enormous supply of companies? They're not all going public. They're not getting acquired.
Not all, but I mean, let's see. I think the best ones will go public. There's now a Duolingo that I would just want to stress this. In this current macro, they have a much higher multiple on their revenue run rate than comparable SaaS companies.
Duolingo. Yeah. That doesn't surprise me.
But it surprises everybody else because this is supposed to be the model.
Bill.com, which is at a 1.6x revenue multiple. If you were to compare the two on future cash flows, I would absolutely lean towards Duolingo.
Me too, and I agree. But that seems to not have arrived in the general multi-stage firm investors mindset. And so my hope is that in a few years we have more examples. And so it will open the door for smaller IPOs, but more IPOs. And so I think that will happen. The best of them will do that. And I have companies in the portfolio I'm confident we can do it. Not sure that it will happen, but we're on the track. And so the others, yes, there will be a M&A roll-up. In fact, I'm not stupid. I also realize that there will be an opportunity in rolling some of these up because some of them are reaching a ceiling, but they're very highly profitable, right? Yes, 10 million, but 3 million in EBITDA, common. And so you roll up a couple of these, it becomes a very interesting financial thing, right? And so I've invested in 3 companies that are doing that. So I have the best of them, I have the infrastructure, and then I have the hedge, which is let's take the ones that don't work. And so I think it will happen. I think there will be acquisitions. I think there will be a lot of big firms. The one example is Rocket Money bought Truebill for 1.5 or something like that billion, which might have been early because I think they're still accelerating. I have a competitor in the portfolio that's building around AI first, that called Chargeback, that I think can take them on. It's a huge market. But I think that there will be a lot of companies that won't to own that type of customer relationship, right? They all have millions of subscribers that are heavily engaged with the product in a certain demographic. That's strategic value, right? I also think Spotify, Netflix potentially are interested in some of those more content-focused companies at one point, maybe even interactive ones that are going into gaming more and things like that. So I think that there will be strategic acquisitions. I think there can be financial acquisitions, and I think the best of them will have public outcomes. But anyways, this is one of the things I'm worried about trying to navigate, right? Like I think it is also clear to me that we have few data points because of what I've seen and because of the thesis that I have formulated over the last 8 years. I believe more than others that it will happen, but I will be much more comfortable in 5 years if there's 4 more firms we can talk about.
Where does your anti-establishment vibe come from? You're a hipster, you're cool. Like the clothes, the shoes, the socks, people don't see it. But like you're an anti-establishment. I am too, but I look like a posh boy.
I don't know. I think it's I think if you were starting your own firm in your 20s, I was 30. You're like trying to go.
I was 22. Was the first one.
Right. So you're
I'm like Wayne Rooney for venture.
I think it's not about what you look like, it's about like what you do, and if you do that then you go your own way in some respect. And I think that is something, by the way, that I think founders respect, right? Because you're not an associate or principal, even a partner that was hired into a firm with a cushy salary, but you took a risk, you built something, and you're trying to be also empathetic towards the founders that are doing the same thing. So I think that's one of the big strengths of our model. Why is it? I don't know. I think, for me, I think I was I grew up with my mom. And so I think I didn't have a father figure around. I did go on on vacations, and I saw him. He was involved. He was not like an absent father, but he lived many hours away. And in the end, I think that made me just find my own path more and be comfortable with my own worldview and decision making. And I didn't have so many other role models either, I would say. And so I think
when you look back now, do you wish you had?
Hey, would I, let's say it this way. I now have 1 kid. I'm expecting a second. And it's very important to me to be a good father to the family, in both a husband and a father to my kids, because I do think it really, did hurt. When your dad leaves at a young age, it just leaves a mark. Yeah. And I think that's part of where my drive comes from. I don't think it's all of it, right? I think there's genetics and just serendipity and how things play out and so on. But we grew up with very little money. Like my mom had 3 kids from different fathers by herself. And when I grew up, that was also, there were limitations, right? And so I think I just tried to, those things, like I tried to just have agency and independence. Well, I don't want to make it sound like I had everything that I needed. I never was hungry. My mom, I know, loved me, and I think that there's much worse upbringings. So I don't want to go there, but I just think that finding
Nico trekked across the desert with nothing but a sherbet lemon.
Yeah. That's how I started. No, certainly not. And in Germany, right? Like, so this is also like, what are we complaining about? I'm a white man that grew up in the Western world, right? So there's very little things. But still, do I have some trauma from how I grew up and my circumstances? Yeah, and it formed me. And that's, everybody has those, right?
Sure.
And so I don't think, for me, money is any ultimate goal. I need money to be independent and have the freedom to do the work that I want to.
Do children make you more hungry for money? It's something that we spoke about on Message, but like kids change a lot.
I think, what changed actually, and I'm still a young dad, right? My daughter turns 3 this month, and my son will be born in 1.5 months. So also still learning there. But I think it didn't make me, I actually am quite concerned about people that grow up with too much money. I think that it can be very harmful for kids to be too pampered. And so I want to provide security for my family. And I really enjoy being able to take my wife. We went to Japan recently as a baby moon with her next baby, and like went to nice hotels. And I feel very grateful that I'm able to do that, and I really appreciate it. It's not that I really don't take that for granted at all. So I'm proud that I achieved that. At the same time, I don't have a number in mind. I don't think that more money will make me any happier. I don't think I need more money to make my kids happier. Like it's really not what's driving me today. And I think what changed with the kids is more understanding that I think it makes you think even more long term in some ways, because you want the world to look good for your kids. And so you think about things that might happen beyond your next, lifespan, whatever it is.
Yeah.
But I think that also, for me, I think that had a positive impact on where I want to focus my investments, right? And do I want to be in a company that I wouldn't feel good about telling my daughter about?
That's a good question. Chris Sack always says that one.
Yeah.
Am I proud to tell my children that I invested in X company?
Yeah. And I think so. So I think kids, and this is a bit of a rational way of saying it, but I think kids are a very smart invention by nature, or forcing function to force us to think long term. Right, because we're all especially us, right? We're solo GPs, started a firm. No. We think a lot about ourselves, right? We're we have a lot of ego. This is everybody, but I think us as well. So it's learning how to think about other people. It's a process, right? And VCs are not the best at it. And so I think that awareness of we're part of a whole. This is my family. These are my friends. These are the companies I work with. These are all the employees that they have. This is all the customers that we're touching, a lot of people's lives indirectly. And there comes a responsibility with that of making sure that we do our part so that all of this doesn't only serve ourselves, but also the broader community of people, even beyond that. I'm a vegetarian for 12 years. So I think I try to think more broadly about how we fit into everything else. And so, yes, I am also an egoistic person in some ways. And yes, I want to be successful, but I try more and more. And I think kids are one of the ways that this has changed for me to have a broader perspective.
Nico, I could chat to you all day. I want to do a quick fire round. So I'm going to say a short statement. You give me your immediate thoughts. Does that sound okay?
We try.
Okay. So they're not easy. You can invest in one seed firm. Which seed firm is it?
0.9.
Why?
I think they have the combination of, one, I like them. 2, the returns are great. And 3, I think they're doing it in a way where it's very founders focused, smart, low ego. I think I was very lucky to start my career with them because I come from a family of artists, and I think it's a very unique thing to have people so low ego doing so well.
I agree with that. You can invest in a Series A firm. Which one do you do?
USV. I think they're. For me, I've brought them up. I'm a big fan of how they're operating, thesis driven, good people, diverse. Not just isolated venture people. Small funds, high returns. Certainly. Also a model in some ways.
Final one on the LP selection. What growth firm are you gonna do?
I would probably say Founders Fund.
Why?
Because I also respect their approach a lot. It's certainly different to mine in a lot of ways, but I think they're founder focused. They are willing to think independently and act on that without too much concerns about what other people think, which can be controversial, but I think overall will serve them well. Also, they're the only ones that cut their fund size in half proactively when the macro changed. So they went from, 1.8 to 900 million in 2 funds, right? So it's a good way to do it, right? Because all of a sudden you operate under different constraints and you still keep the next fund in the back pocket. So I think they're quick to adapt. I think they have a really good way of appealing to founders. And I think they really act with conviction. I know from multiple investments, and this is also public, that they've put a very big percentage of their funds into one company.
Brian Singman says the enemy of great venture returns is capital concentration on a per company basis. Says that on the show. Tell me, what have you changed your mind on in the last 12 months?
Probably this is personal, but it's having another kid, I think, because it took quite a while to get over the sleep deprivation of the first one. And so really just a year ago that we started talking about, should we maybe have a second one? And in the end, like, I think the answer is yes, and everybody says you forget about the, first year, maybe 2 years where it's more difficult, and all the, the love and growth of the child really makes up for it. But that's something,
I was walking with someone the other day and we were talking about you, and I said the thing with Nico is he seems like one of the rare people to be actually happy, like just content.
That's a big statement. Yeah.
Do you know what I mean? They were like, I'm happy, but I'm not really happy. Like most people.
Yeah.
You just seem very content in a lovely way.
I appreciate that. And I think I do feel content right now. I will say that, like every other human, I have phases where I don't. And I think it's something that we have to also talk about more, because I think one of the problems with social media is that it has become a highlight reel of our lives, right? And we are social animals that compare ourselves to others. And so let's be real, right? One of the theses, for me at least, was like, it's kind of cutting through that. And it's like, no, what are you doing right now, right? And so I think that is something that I would, hope we just are more open about, that some of these changes just don't lead to us being content with ourselves, but just comparing ourselves to others all the time and not having real human interactions, but just like digital world. And I'm a tech investor, right? So I'm pro technology. I just think we have to learn the right way of dealing with it. And so because I was kind of thrown into the 0.9 waters when I was super young, similar to you, I just had to find ways to be good with a lot of things and change, and probably overwhelmed in some ways. And so I just really try to find the right balance on things, and do the exercise and read and have time for my friends and my family and take vacations, and just not be fully consumed by this drive that we have, but really have the drive be one of the components of my life.
Who's the most valuable board member that you've sat on a board with?
There's a couple that come to mind. The one that I want to single out, because I just really appreciate him as a person and what he can add, is actually not a VC, but it's the founder of Belkin, Chad Pipkin, who is sitting on the Backbone board with me, which is a company.
Belkin is in the accessory device manufacturer.
Yeah,
wow, I've had so many Belkin devices.
Yeah, he's a legend, man. He's so he bootstrapped the company and sold it for $1 billion to Foxconn. He was one of the first to do accessories for Apple devices. And this company Backbone that I'm working with, they're on the West Coast, and it's a gaming device for your phone. So you slot your phone into it, and then you have a software layer on top of it that you pay a subscription for, which turns your phone into a mobile gaming device. So it's a Nintendo Switch, but it costs $99. And so it's a great product, the hardware angle, and then the software angle. And actually, I invested before they did the subscriptions with the pitch, let's do the subscriptions together. And so now it's both a hardware and a subscription company. And I'm a gamer, so I enjoy it a lot. I usually have it with me when I travel. And this guy is just, probably one of the smartest about hardware. So it's what I appreciate is just his operational experience and what he can add in an area that I have no idea about, right? Amazing. I learn a lot from it. He's also at the same time very kind as a person, very good at sharing credit, giving compliments, also being very direct and pushing on things that are not good in his eyes. He has 7 kids. He was one of the first people to tell me that it took him years.
7 kids to not have kids?
No. I mean, I don't know how he's doing it, honestly. It's crazy, right? Think about that. I can't imagine. But he also said, and I think this is very true also for people like us and founders in general, that it took him many years to learn how to distance his person from the business, right?
I've never been able to.
No, and
my happiness
I'm not
is the business.
Yeah, and so, but part of the growth is, I think, being able to do both, right? Accept that you started it and that your self-worth and ego is tied up into the company in a big way, but then also going out of it and being able to drop it and not having it determine your mood, and going to your family or your partner or your friends and like, not having them feel it so much.
I think also in Venture, it's like two willingnesses. It's the willingness to be lonely, like lonely in your views that you're right. And people say you're wrong and consumer subscription is not great. And then also the willingness to be inactive. Sometimes it is just, there's not deals. And actually sitting on your hands is tough.
Yeah, and even I think people, like I agree fully with this, and that's also my approach, where I think people fall into the trap of being busy, right? You're going to see every company, every conference, read every blog post, tweet every time, right? Like I think
listen to every 20 VC
podcast. At least they learn something, right? I think it actually is I think it is a medium where people learn because it's a conversation. So I actually think it's beneficial. I learn a lot from it. But then I think that the issue becomes, if you don't give yourself, like some of my best ideas or breakthroughs or thesis, I get when I'm sitting in my desk and I have no appointments for 3 hours. And I just can let my mind go, right? Or I'm maybe not even in the office, I'm taking a walk through London between my meetings, right? And I see how people are using some kind of gadget or whatever.
It's on the tube. I see how people consume like media, content, games, and you're like, wow. Shit.
Harley, you've had him on. Yeah. We worked at Insight together. He's like watching mainstream US TV to get a sense for what the consumer thinks about, hears about,
it's so
the advertising, right? Like, so I think you find your ways and your style to be, creating those theses. And I think for me, it is not being busy all the time. So I agree with that. Sometimes you just have to, and also last one, sorry, I know I'm belaboring this, but I think this is also important, is like, I used to always be on all the time. And I still think I'm on most of the time, right? Like I check my emails in the morning, in the night, but I had this, we had a coaching session at Insight, and there was a guy who was like, that's sad. Like you have to, like, if you want to, like, you have to take a view that, like a athlete, there's 3 seasons. There's preparation, training, then there's performance, the race, and then there's rest. And so you need to like think about it in these, and I really adopted that, where I think that there's sprints where you just have to go, right? Whether it's like the right company comes along and you just jump on it, whether it's a fundraise, right? Whether it's something in that regard, you just have to be there for it. And that is preparation for it. You want to do it in a thoughtful way. You want to be mindful about it. You want to get your ducks in a row. You want to have, make sure that there's enough to talk about, blah, blah, blah. And then there's also rest, right? And I don't feel guilty for going on vacation and for a week turning off my phone. I mean, that's an exaggeration. I don't quite get there, but like I have,
Well, I left it at home on the walk. Okay.
Yeah. No. But a few days, like when we went to Japan, I really for 5 days didn't I check my emails. Right?
That is amazing.
And I think that's important because I come back and I'm so energized, right? And we have to also be able to do that.
I totally agree. There's a final one, my friend, but I'm excited for this. So next 5 years for you and Adjacent.
Yeah, I think the next 5 years will be very similar to the last 4 in that I just keep on doing what I think will be very good seed investments.
Do we have another partner?
I would assume not, but I would not. There's probably not a 0% chance. So I'm not operating, and I'm also very transparent with you, with LPs about this. Is the way that I talk about this is that there's a small group of people that I would be interested in exploring this. Yeah. But it's a very small universe, and I want it to happen organically. Yeah. Because my role model, again, Pavel Krysov at Point9, was that Krysov was an LP in the Point9 fund. We co-invested in 30% of the deals of that fund, and then they decided to do the fund together, right? So there was trust, there was co-investments. Yeah. So I need to have, I'm very happy.
You need the trust.
You need the
trust.
It takes
years.
And you need to have this feeling of the collaboration is powerful and works and complementary, and as a person you get along. There's so many aspects to it. So like, am I open to it in theory? Yes, for sure. But I have no rush in doing it. And I also know that I give up and give a lot to that person because we're already somewhere, you know? And so giving up flexibility, independence, decision-making, all the economics, right? There's a high bar to be crossed for that. So I would assume no, maybe yes, we'll see. But I think the more important is there has to be more data points for consumer subscriptions in 5 years from now. If there's not, I will have to reconsider my strategy. And if there are, I think the portfolio will be very good.
Nico, listen, I've loved this. It was so recent, 8 years ago that we did the last one. I cannot,
wild.
honestly, man, I'm so touched that you also allowed me to do this because I know you don't speak publicly. So thank you so much for doing it.
No, very happy to be back and enjoyed it, and see you in 8 years.